the breakout, and it's been reliable with past cycles here. And you get the breakout. I think if you draw it to here, that's the breakout. It's the middle of the accumulation zone. And actually, we were forming a really nice trend line here. I remember monitoring this at this point. It hit at this point, it hit there, and then it snuck out. And it stuck out right at that zone here, and it was ready to start to, put in a floor. And then we had the unwind from FTX. So this now looks like a bump and run pattern where we break out of the trend, and then we're now retesting the trend line. My opinion that this will test well and go upwards. And so what I've done here is actually now also account for the grayscale coins, which is I think it's about 3-4% of the Bitcoin supply, maybe even more, 4.5%.
Yeah,
something crazy. 630,000 Bitcoin in there. Yeah. And then if you look at what's happening inside there, roughly 60%, assuming 60% of the coins are underwater. I did a survey, and you kind of can account for what's happening in that black box, which won't be shown on chain. The green sort of corrects for that. And so that is currently today at $13,000 and climbing quite quickly. You can, if we zoom in to this zone here, you can see that that's climbing up quite quickly. So we're getting quite close to a touch. It doesn't have to touch every time. We didn't touch there. So the RV ratio, which is, pretty much how much it's valued compared to how much people invested into the network, and bottom again. So, lately I've been taking all of this stuff and like going, let's grab it. This is like 13 of these macro indicators, and I've put them all together. Right. And it was like, there we go. This is actually, there's more than two than that, right? It's like, there they all are, right?
That's a lot.
That's, it's, so what I like about this is it's starting to show, it's starting to show us all of them in concert. And so I've grouped them into, sectors. Like this one, the cyan color is the HODL power. There's different colors here. This bluish is measuring the profit from investors, and each one of them are composited of many, maybe up to three or maybe even four different metrics. And so you can look at it and you can see, well, like this bear market, they're all very much agreeing.
Yeah, and they're also agreeing that we're at the bottom. Like if you drew a support on any chart, it would be very clear that we're sitting at it, right? I mean, that's right. You just draw one horizontal line there. It's very obvious that it is at support.
Yeah, I mean, this is that's the thing. It's not only we're in the bottom, but in this bear market, they're starting to agree with each other. Whereas the prior market, there was a little bit of discrepancy in different dimensions that you're looking at. So the broadness of this area was wider, but they're very much coalescing into very, very much agreeing. There's a little bit more uncertainty since we're bottoming. It's widening out, but mostly we're in a bottom zone. I mean, something seriously bad would have to happen, I think, for us to, break this down a lot further and have, we haven't done this, I guess, ever in Bitcoin's history. We dipped as low as here in the early days, but you can also see from these metrics, they were pretty wild. They're pretty
2011,
wild.
Yeah.
Right? 2010, 2000 was completely different industry back then, and it was very wild moves, and the metrics the needles were spinning everywhere, right? And then we sort of capture it. The way this works is it's a 4-year metric on standard deviation. So we haven't even coalesced 4 years of backtrace here for it to normalize. So around here it starts to become normalized, right? So like from here it's very, very reliable. So anyway, that's that's I mean, that's my view of it. Actually, well, it's not my view. It's these are metrics built by all of us, really. I think like 12 wouldn't shock me. 10, I think everyone's wanting, and so it usually doesn't hit what everyone wants. Yeah. So 12 wouldn't shock me. 12, 13, I think. But I don't think, if you think about that, it may run away from here. It may drop even further. These are very broad stroked indicators, but it's probably not a bad time to dollar cost in. If Binance collapses, yeah, well, that's a nuclear winter, right? Holy shit.
FTX. But I would have said that. I would have said that about FTX, right? If FTX collapses, nuclear winter, and here we are 1,000 below that range we were talking about. It's really not as bad as it seems.
Oh, it's it's if you look at it right now, with like 800 million backing, $68 billion of assets, and then you take into account, over 40% of it is highly correlated in BNB tokens, and the other bit is, I think 68% is both BNB and BTC. Like if Binance goes under, like there's a major hole in that in their balance sheet. Like their insurance fund is like 68% correlated, being Bitcoin and BNB. So you might say maybe 250, 300 million of it is solid, as in US dollar.
That's nothing.
Right? It's like 50 basis points. It's like 0.5% or less of assets under management is backed by the SAFU fund. So
right.